Good day, ma'am. Today we're going to report about statement of changes in shareholder equity together with Gumunod, Blancia, Galvez, Bucao, Villanueva, and Turtur. Statement of changes in shareholders' equity or statement of changes in equity is a financial document that a company issues under its balance sheet. The purpose of this statement is to convey any change or changes in the value of shareholders' equity in a company during a year. So the statement of changes in shareholder equity is a financial statement that shows the changes in company's equity over a specific period of time. It provides information about the company's net income, dividends, and other transactions that affect the equity of the company. The importance of statement of shareholders' equity. A company issues that statement towards the end of the accounting period to give information to the investors about the equity position and sentiment towards the company. The statement allows shareholders to see how their investment is doing. It also helps management makes decisions regarding future issuances of stock shares. So, this statement is important for investors and stakeholders to understand how the company's equity has changed and what factors have contributed to those changes.
Components of shareholders' equity. The statement of changes in stockholders' equity is typically divided into several key components that provides important details on how a company's equity has changed over time. Components of a statement of changes in shareholders' equity. So the first one is beginning balance of equity. This component represents the total equity balance of a beginning of the reporting period. So in the beginning balance, it represents the total equity, total equity balance in the beginning of the very period. The very reporting period. So the second one is the net income. This component represents the net income earned by the company during the reporting period. So in here in net income, this components represents ano yung kinita nyo sa company during the reporting period. And also the third one is other comprehensive income. This component represents gains or losses that are not included in net income, such as changes in the value of investment or foreign currency translation adjustment. So in other comprehensive income, these components also represents the gain or losses kung ano yung na-earn nyo or ano yung nabawas included sa net income, such as the changes of value of investment rather, or foreign currency translation adjustment. So that would be all for my report. Next reporter, please.
Components of statement of changes in shareholders' equity. The first one we have is contributions from shareholders. This component represents any contribution made by shareholders, such as new equity, issuances, or additional investment in the company. It means a shareholder contribution is made by bringing money or assets into the company. What is contributed must have value to the company. One way to contribute assets is to waive a debt owed for the company, such as a claim for expenses recorded as a debt to the shareholder. The second one, we have distributions to shareholders. This component represents any payments made to shareholders, such as dividend payments or stock buybacks. It refers to paying a shareholder stock, cash or property, or any other types of distributions are also available to individuals. The last one we have is changes in accounting policies. This component represents any changes in accounting policies that impact equity, such as adjustments to pension liabilities or changes in the treatment of goodwill. So here in changes in accounting policies, is required by a standard or interpretation or results in the financial statements, providing reliable and more relevant information about the effects of transactions, other events or conditions on the entity's financial position, financial performance, or cash flows. So, moving on, we have here items affecting shareholders' equity. Primarily, there are two types of changes that affect the shareholders' equity. First, the changes resulting from transactions with the shareholders, and second, changes due to any change in total comprehensive income. Shareholders' equity is influenced by two types of changes. Firstly, transactions with shareholders can significantly impact equity. These transactions can include the supplying of shares, repurchase of stores, also known as treasury stock, and the payment of dividends. When a company issues more shares, the equity increases as the company receives cash or other assets. Secondly, is changes in total comprehensive income also affect shareholders' equity. Total comprehensive income is include net income and other comprehensive income. Net income, which is the profit or loss made by the company, directly affects in the retained earnings from the company.
The issue of new share capital increases the common stock and additional paid-up capital components. Common stock represents the par value of the share, while the additional paid-up capital is the amount paid by investor above the par value. This process helped the company raise more capital. Payment of cash dividends lower the retained earnings of the company. Net income increases the retained earnings, whereas net loss decreases them. Net income contributes to increases the retained earnings because it reflects the company earnings. It, if a company experiences net loss, it will decrease the retained earnings as it has suffered financial setback during the period. Treasury stock purchase increases the stock component and bring down the net shareholder equity. Treasury stock represent shares that a company has repurchased from the market. The company is using its own equity to buy back the shares, that decreasing the overall net shareholder equity. Bonus share issue impact the additional paid-up capital, return earnings, and common stock. A bonus share issue, also known as a stock dividend, is when a company distributes additional share to its existing shareholders without any additional cost. Sale of treasury stock drop the stock component and impact the retained earnings along with the additional paid up capital. This, however, increases the total shareholder equity. Treasury stock increases the total shareholder equity. Since the treasury stock account is decreased, the impact on retained earnings and the additional paid-up capital depends on the selling price of the treasury stock to the repurchase cost. Foreign exchange might increase or decrease the foreign exchange reserve. Foreign exchange reserve are the foreign currency held by a country central bank. They are used to maintain stability in the currency market, manage exchange rate, and support international trade. Financial statement restatement might occur due to the change in accounting principle and it affect retained earnings. Fixed asset revaluation affect the revaluation surplus by increasing it. Similarly, the reversal of revaluation of fixed asset may decrease the revaluation surplus.
Format of statement of shareholders' equity. The statement is set in a grid pattern. The statement typically consists of four rows: beginning balance, addition, subtraction, and ending balance. Beginning balance is always shown in a fixed line, followed by addition consists of all the new investment and net income in case the company is profitable. In case the company incurs a loss, it will show a net loss for the year under the subtractions in addition to the dividends. So the purpose of this is to show how the company's equity has changed over time and can be used to help investor and the business owner to understand the company financial condition. Well, the next reporter will give us an example of format of statement of shareholders equity.
So here is the example of statement of stockholders equity or shareholders equity. For this company, Pepper Corporation, they have four equities account. They've got common stock, paid in capital, retained earnings, and treasury stock. So our balance in the accounts on the common stock, we have 20 million in the beginning of the period, which was on January 1. And then at the end of the period, we have 24,150,000. As we notice, we have an increase of 4,150,000. And it's because of the additional issued share for cash for 3 million and a stock dividends for 1,150,000 that makes it 24,150,000 in the end of the period. For paid in capital, in the beginning we have 25 million and at the end of the period we have 41,600,000, and as we notice we have an increase of 16,600,000, and it's because of the additional of issued shares for cash for about 12 million plus the stock dividends amounting to 4,600,000 that makes it 41,600,000 in total. For retained earnings, in the beginning we have 11 million and at the end of the period it lowers down to 7,750,000. The reason why it decreases it's because of 11 million retained earnings plus net income of 4 million minus the cash dividends of 1,500,000. Subtract again to stock dividends for 5,750,000. That makes it decrease to 7,750,000 at the end of the period. For treasury stock, at the beginning of the period, it has 5 million and at the end of the period, it increases to 7 million. The reason why it increases is because of an additional 2 million for purchase of treasury stock plus the balance of treasury stock amounting to 5 million in the beginning. That makes it 7 million balance in total in the end of the period. And here is the total of the stockholders' equity. In the beginning of the period, on January 1, it has a total of 51 million. And at the end of the period, which is on December 31, we have a total of 66,500,000. So the stockholders' equity balance from 51 million, it increases to 66,500,000 in the end of the period